move, bang, we put on that trade because we also needed short exposure. The market was getting heavy. The volatility measures were starting to go higher. So we had a feeling those overall indices would fall. So we wanted to share a bearish trade. We did that in ALB. Here's the trade. Denny was able to make $900 on his trade. Great job, Denny. But DT, he paid for his all access membership. That's $5K plus. So great job, great trade. And that, my friends, is a nice quick win. Let's talk about GameStop. GameStop had its big squeeze in 2021, right? Roaring Kitty took the stock from what? $5 all the way up to $300. Well, that happened way back in early or late 2020, early 2021. But did you know that at Masters in Trading, we found the game short squeeze a month before Roaring Kitty shared that big trade? And the reason we found that trade is because the short interest in game, when I originally shared this first YouTube video, was 97%. The short interest ended up spiking up to 125%. All the shorts were trapped, and there was a vicious short squeeze. It's not so easy to get the recognition, but you're the one who predicted this, Jonathan. I'll admit, I watched your video, and I'm playing it since August when you made the other video. You're the real one who called this. I remember it like it was yesterday. And then Kramer found my video, tweeted it out, and then you can see here, amazing, been squeezing since this video, and this is really nice, but far from the truth. I'm just good at following options. What is interesting is not only was GameStop squeezing back in 2021, but up top here, this is our advanced notice screener. This is the data going back about 20 days. These green marks on 827, 829, 830, 903, 906, that's when GameStop was hitting the top 10 in our unusual optioned activity scanner. So if you'll notice, game here, 827, look where game was right before we started to see this massive unusual optioned activity. Now, the unusual optioned activity doesn't necessarily mean that it's bearish. It just means that somebody's in there and somebody knows a heck of a lot more than we do. Let's look at the stock. This is GameStop right now. I took this screenshot maybe 20 minutes ago. So October, game is trading 23. October, there's 39 days until expiration. Why? I want to show you this because the 50 strike is $1. $1. So in order to get long 1,000 contracts, 1,000 shares of GameStop, you have to pay $100 to get long at 50 in 39 days. If game doesn't get above 50, these dollars are absolutely worthless. But why this is so crazy is this is very expensive, and the market is pricing in a somewhat high probability that the market's going to trade over 50 in 39 days. That's a heck of a move. Look, if I go out to January, 130 days away, $125. It cost $113 for a trader to buy one call. If you buy one call on the 125 strike, you're long 1,000 shares, you're long 100 shares once game trades above 125. But here's the thing, guys. The stock's at $23. They're pricing in $100 higher in 130 days. That's 5 times the value of the stock. That is insane. But that's pricing in the potential of a squeeze. I like to put this here because sometimes I forget to stop. Telvin, if you could throw me back on live. So our advanced notice is looking for the most unusual trades in the market. The only way really to follow this is to have technology that's always searching in the background and sharing our top 10 trades. That's where it shared ALB for our quick win. We saw game coming up over and over and over. Remember, whenever we find these unusual option activity trades, we're always thinking where there's smoke, there's fire. If we see a lot of activity, there's probably a reason why that activity is taking place. Somebody is placing a really big bet. In our all access portion of our program, we're going to go over 2 trades. Thanks everybody for watching. We'll see you live tomorrow.